Hello and good morning, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It's Wednesday, January 4th, 2023, and I am pre-recording this Trading Places Live for Thursday, January 5th. Currently, futures are weak. Of course, we still do have to go through the rest of the evening, but currently Dow futures down about 100 points, S&P 500 futures down 13, NASDAQ futures down about 50. Crude oil looks like it is up at this point, up maybe just under $1, so $74 a barrel. And the U.S. 10-year Treasury yield currently at 3.71%. But again, things can change overnight, so we'll have to take another look at that, see how things open in the morning. In the meantime, let me go through the agenda with you for today. I'm going to start off with the daily market recap. Then we'll jump into 52-week highs. Even though the market overall hasn't been doing great, we are seeing quite a few 52-week highs. So I'm going to go through some of those with you. We'll take a look at MarketVision 2023. That's going to be held this Saturday, January 7th. It is a free virtual event. No credit card required. I invite you to join us, and I'll give you some more information about that in just a little bit. Then earnings spotlight. We do a couple of events every quarter relating to to earnings, and so I thought I'd spend a couple minutes talking about that, and then we'll wrap up the show with the 3 you must see. Before we get into any of that, though, I do want to just take you over to Earnings Beats. If you'd like to join our free Earnings Beats Digest newsletter, it is free, no credit card required. You can unsubscribe at any time. All it takes is a name, email address, hit that subscribe button. 3 times a week newsletter, Mondays, Wednesdays, and Fridays. It is a very short read, so just a couple paragraphs in a chart, so very simple. And I do try to make it educational, and you may find some trading candidates in there if you so choose from time to time. But go over to earningsbeats.com, scroll down, and make sure you sign up for that Earnings Beats Digest newsletter. All right, let's move on to the daily market recap. It was a pretty decent day on Wednesday, our second trading day of 2023. Dow Jones Industrial Average finished up 133 points. The S&P 500 was up 29, the NASDAQ up 72. Mid caps up 37, small caps up 14. On a relative basis, mid caps and small caps actually did better today. Up 1.53% and 1.20% respectively. S&P and NASDAQ were pretty close. They were up 0.75% and about 0.7%. And then the Dow was the laggard, came in up 0.4%. We had the FOMC minutes come out at 2 o'clock, and they just revealed what the Fed has said, and that is that they are not done raising rates. They're looking for higher rates in 2023. And it spooked the market again. Pretty much anything dealing with the Fed, and we tend to see the market go down. We did recover a little bit into the close. We'll see what happens, but as I mentioned earlier, futures are down right now. We'll see whether or not that carries over into tomorrow. But the lows from October would be the lows that I would be watching closely, especially on the S&P 500. We've seen a lot of those large cap growth-oriented names like Apple, Tesla, NVIDIA, Amazon. Many of those companies have been hit pretty hard, and they're very heavily weighted in our major indices. And yet the S&P 500 has been able to shake it off. And even though those companies I just mentioned have all gone down to new lows in 2022, the S&P 500 still resides quite a bit above the lows. So I think that's a pretty good sign. You can see right here on this S&P chart, we're still probably 300 points or more, 350 points above the low that we saw back in October, even though many of the largest companies and the biggest influencers in the S&P 500 have broken down. So that gives you a little bit of a sense of the rotation that's taken place. Normally, if you had told me 6 months ago that some of these large cap names were going to be taken down like they have, I would have said S&P 500 is going to be at a low. But it's not. Money is rotating. The money is not leaving the market. The proceeds from those large cap growth names are simply rotating into other areas of the market, and that's a really good thing in my view. Looking at the sectors, real estate up 2.29%, communication services up 1.87%, materials about 1.75%, financials 1.6%, and discretionary 1.45%. Really, really strong action pretty much across the board. We do have some work to do on some of these groups, especially you can see real estate, which has been trending down. AD lines very, very poor and weak. Communication services has been trending down. AD line has actually been holding up, not trending up, but holding up, just kind of going sideways for a while. Materials look pretty good. Financials look good. Discretionary, kind of like communication services, trending lower, setting new lows recently, although communication services did not. Discretionary has set new lows, mostly because Amazon and Tesla represent about 45% of the XLY, and both of those stocks have been under a lot of selling pressure over the past several months. And so discretionary has gone down as a result, but the overall AD line here has held up pretty well. Certainly not going down at the rate that the price action's been going down. So there are some silver linings out there, but overall, we could use some more support from some of these key aggressive sectors. 10-year Treasury yield was down again. And this is interesting because if we look at what the S&P 500 did after 2 o'clock when the Fed, the FOMC minutes came out, there was a lot of volatility. But when you look at the 10-year Treasury yield, from 2 o'clock on, we had a little bit of a move up, a little bit of move back down. But basically, we finished right about where we were when the minutes came out. So not a lot of movement here in the 10-year Treasury market in terms of the yield. And but if we look at the spider, which tracks the S&P 500, you can see also we finished pretty much unchanged from where we were at 2 p.m. when the minutes were released. But look at the volatility. I mean, we were at 384, barely over 384. We went to 385.5. Fell back quickly, 382.5, then back to 384.5, back to 381, back to 384, back to 381, and closed back up at 384. So you can see that there was a lot of violent movement back and forth, and yet by the end of the day, we're about where we started, not really, too far down. So all in all, I thought, the market handled it okay. Excuse me, hold on one sec. So one of the things that, I've seen here in the beginning of 2023, the early part of 2023, is something that we saw a lot in 2022. And that was a lot of selling in the morning. You can see on Tuesday, the first day of the year, first trading day of the year, all the way until about 12:45, first half of the trading day. We did gap up in the morning, but then it was mostly selling all the way until the halfway point of the day. And then we rallied back. And then on Wednesday, kind of the same thing, but only lasted about 45 minutes. But we gapped up, pretty big selling. We went red. Then we turned around, had a pretty nice move back up. Could not take out the Tuesday high, though. And then started coming back down. The announcement came out. We saw a lot of choppiness after that. But we did finish more toward the upper end of Wednesday's candlestick than we did the lower end. So I think that was good. We'll see what happens tomorrow, and we'll see what happens to futures overnight. But at least for now, we're trying to hang on to some of those recent lows. All right. Let's see. Let's move on to the 52-week highs. So I'm going to go through some of these companies that are setting 52-week highs. You may not be aware of it because the market's been so weak, and maybe you're focused on a lot of the growth companies. I mean, I stay focused on a lot of those as well. But Apple, not doing well. Amazon's not been doing well. Tesla, of course, NVIDIA, AMD, many of the semis. The auto stocks have been horrible. Some of the software have been rough. Microsoft, which had been holding up pretty well, all of a sudden yesterday got a downgrade, and it took a pretty big hit. So let's look at some of the stocks that are performing well, though. Here is Melco Resorts and Entertainment. This is in the gambling area. And really since, hold on one sec. Really since back in at the end of October, We've had a nice run in MLCO. We were down below $5. Now we're up to 13. That's a big run in just a little over 2 months. So some of these gambling stocks are really starting to make a move. I've got another one for you here in just a minute. But look at the AD line as well. I mean, we were going nowhere, going sideways, just really just chopping. And then we had the AD line coming down till the end of November. And now, literally here in the last 5 weeks, the AD line's exploded from a 52-week low to a 52-week high. Look at all of these candles, almost all solid or hollow candles, meaning that we're closing above the open almost every single day. And that's why that AD line's been soaring. Volume trends have picked up very strong. And there was your breakout on Wednesday. IQ. This is, let's see if I can get this for you. There we go. IQ, another one that's been making a big move over the last maybe 10 weeks or so. Fell down to a low, which was down below $2 a share, comes rumbling back up, goes through $6, $5.50, which is where the double top was from back in March and April. And we made that breakout. AD line looks strong. Look at the volume coming in. Very, very strong. And this volume, this heavier volume, is at a much higher price. So the dollar volume is really surging to the upside. I mean, back here, we were probably averaging about 10, 15 million shares when it was at $2. Now we're averaging 25 million shares, 25 million shares a day at $6. So you can see a lot more money flowing into this stock right now. Looks really good. LVS is another gambling stock, Las Vegas Sands, moving up off of that October low, put in maybe a double, triple bottom here before taking off to the upside, breaking out. And we took out that February high recently, and then we just took out that high. This is a nice little bull flag. There's that flag, and then we break out of it. Looks strong. Volume's picking up. Certainly looks like it has further to run at this point. QFIN. This is 360 Finance, another one that since the end of October, making a big push. So from the end of October, early November, that's when we've seen a lot of these growth stocks, these large cap growth stocks take a beating. But that money is rotating into stocks like the ones I'm showing you here. And that's why the market's not breaking down. We're seeing other stocks in other areas of the market carry the load. GERN, this is Geron Corp. This is a biotech, small biotech. Was it was in a nice uptrend from June through September, pulled back, and then literally sideways action between $2, $2.50 for the last few months. Got a big gap up. Look at the volume surge. Now, it did close near the low, so we may go back down and fill the gap. Sometimes these biotechs, or have these teaser days, I like to call them, where they jump up and you think, oh, I better jump on board. The next thing you know, you're right back where you started. So I wouldn't be surprised to see a little short-term weakness, but it is notable that we broke out here. And in fact, if we pull up a longer-term 5-year weekly chart, I mean, you can see after the big drop back in 2018, we had not gone back through $3 or $3.10 until today. So Geron looks pretty good breaking out. But again, with that close near the low, maybe we have to go back down a little bit the short term. But that was a lot of volume that came in to trigger that 4-year breakout. All right, let's go back to the 1-year chart. And let's take a look at Buckle, BKE. So Buckle is in the apparel retail group. I don't know if you've noticed, look at apparel retail relative to the S&P 500. This has been one of the strongest areas of the market the last 4 to 6 months. And you can see BKE, Buckle, versus the S&P. And look at Buckle relative to the apparel retailers, breaking out to a new high. So this is a leading stock in a leading industry group. So there are other areas of the market besides technology and consumer discretionary and communication services that you can find some really strong performers. And Buckle just breaking out above that early December high, which is just about above $46. We closed at $47.01. Look at the volume pick up again on Wednesday as well. All right, just a few more here. How about Chubb? This is in the insurance area. CB, Chubb Limited, been trending higher. Again, this one was the end of September. So this has been in a nice uptrend now for a little over 3 months. AD line finally starting to turn back up. That was a little worrisome during most of this advance, but it's starting to pick back up again with all these hollow candles. And we did break out, volumes picking up, and look at the relative strength in Chubb relative to its insurance peers. Docs, this is in the software area. Amdocs, DOX, AD line, new high, 52-week high on price action. Coming up off the 20-day moving average, moving to a new high. I like it. And you can see the relative strength of Docs versus its software peers. Software remains weak. I mean, even to start this year, you can see, and a big part of that today, obviously, was Microsoft, because Microsoft was so weak with the downgrade. But software, even before that, you can see it's been downtrending for quite a while. But Docs has been performing very well all year long. So this is one of those software stocks that has been going against the grain. And then the last one is Thomson Reuters, TRI. You can see this one just making a new high on the close today. Look at the volume picking up. I think this one looks pretty good after consolidating. We had a nice little cup, little handle, and looks to me like we're getting a breakout here. AD line turning back up, and the relative strength also now has been picking back up again for about the last 6 or 7 weeks. So I think this is looking pretty good. We could use a little bit more strength out of the publishers, but we did break to about an 8-month relative high here to start 2023. So we are starting to see a little bit more strength in one of the industry groups within the communication services area. All right, let's talk a little bit about MarketVision 2023. As I mentioned, it is this Saturday, January 7th. It'll start at 9 a.m. Eastern. It'll go on for several hours. Listen, if you can't make it, you still want to register, because we will send you, anyone who's registered will get a copy of the recording, and it'll be time-stamped. So if you want to go in and look at a particular area or a particular topic or a particular speaker, you'll be able to do that. I've got 3 good friends of mine from StockCharts. They're excellent technicians. Really excited to have them join me for this year's MarketVision 2023 event. And you can find those by clicking on, if you go to our homepage at earningsbeats.com and you click on this MarketVision 2023 link, there's your registration form. Very simple. Again, it's free, no credit card, name, email address. That's all you got to do. You can go back and look at the history of some forecasts that I've made personally, the last 3 MarketVision events, and then you can scroll down and find out more about the agenda. So I'm going to have a session where I am talking about, things that you need to be thinking about, organizing your thoughts, planning ahead to find really strong candidates, trading candidates. So this session is really designed to try and come up with some ideas to help you prepare to be more successful in 2023. Julius de Kempenaar will be joining me. He is the founder of the RRG charts, relative rotation graphs. If you've ever looked at those, they're very, very visual. I really like the way that they show the rotation in the market. Julius will be on hand to go over exactly what's been taking place in the market in terms of asset classes, sectors, and so forth. He's going to go out on a limb, talk a little bit about his price target for the S&P 500. We'll get some of that from everybody this weekend for sure. Grayson Rose will join us. Grayson will be talking about his approach. He's very organized. One of the things I really admire about Grayson is he's very consistent, very organized, and I think you'll pick up quite a bit from his session. And then Dave Keller, who's the host of The Final Bar at StockCharts, he will be talking about the one chart that he uses that rules them all. And you can go through and read a little bit about that. And then I'll wrap up the 2023 MarketVision event by putting all the pieces together that I use to come up with my outlook for 2023 and where I see the market going. So it should be a great event. Again, all you have to do is go over to earningsbeats.com and then click on the link. So once you get to the website, just click on this link, you'll see it. And then it'll bring you over to this page, sign up with your name and email address. I would highly encourage you to do it soon. We are probably going to run out of space. I know we're getting closer and closer. There's only 2 days left, as you can see from the timer here. But yeah, it's going to be a packed house, no doubt about it. We've been doing this for 3 years. My last 3 forecasts have been very, very accurate. Last year, I was extremely bearish, extremely cautious to start the year. And I know I've gotten a ton of testimonials from Earnings Beats members saying that they were able to save a lot of money by pulling out of the market at the beginning of last year. So I'm not saying I'm going to be right or that I'm always right, but I think I'll give you a lot to think about. And so make sure you join us on Saturday. All right. I mentioned earlier a couple of earnings events that we have coming up. And I just wanted to go over those really quick with you. So bear with me. I'm going to change my screen out here for you. I want you to take a look at this Excel spreadsheet. So one of the things I do, and I always tell members, I tell anyone who wants to listen, one of the best signals to use as you head into earnings season is what is a stock doing relative to its peer group. If it is a leader in its peer group, I can't promise you because there's no such thing as promises and guarantees in the stock market. But I can tell you in my experience, companies that are showing relative strength among their peers have a much better chance of producing solid results when earnings come out. Last quarter, back in, I don't know, mid to late October, we did a sneak preview of Q3 earnings where we had everybody come in. It was a free event. And I went through and talked about some of the early companies that would be, reporting, a lot of the banks and so forth. And then a week later, we did this event. This was a member only event. And I laid out for members 58 companies. Here they were in order of their earnings dates. I went out about a week. And you can see over the course of this week, there were 68 companies that I featured. I looked at them. I mean, there were a ton of earnings that were being reported. These were 68 that caught my attention in terms of relative strength. And then I gave 57 stocks of companies that would be reporting earnings that were doing the opposite. They were not showing relative strength. They were relatively weak versus their peer group. And I put them all together. And what we ended up doing is afterwards went back and tallied up the results just to see what happened. And of the 68 companies that I thought looked really good going into earnings season, 57 of them beat their revenue estimate. 10 missed. And then there was one report, I think that, trying to think which one it was. I think I ended up deleting it off of here because I never could find the earnings for it. Never, at least nothing I could come up with that I trusted. So anyway, I deleted one, but 57 out of 67 beat on their revenues. And in earnings, 54 beat on their earnings per share, 11 missed and 2 matched. That's pretty strong. And then I looked at the negative group. And on the negative group, went through the same thing, except only 27 of these companies beat, 29 missed in terms of revenues. In terms of earnings, we still saw 37 beat, 16 missed, and 4 matched. So you can see that the ratio was 37 beating and 20 that didn't beat. And yet up here, we had 54 that beat and only 13 that didn't beat. And on revenues, the ratio was much stronger as well. My point here is, I think this kind of helps to demonstrate why it's important to be looking at relative strength. You're never going to be 100% right. Never. But I think this shows that the way a stock trades into its earnings report relative to its peers gives you a much better chance of finding a company that will beat revenues and beat earnings per share, beat Wall Street estimates when they report their results. Now, the other thing I did is I went over here and I calculated the opening gap after a company reports, the next day close. So where was it from the close before earnings to the close after earnings? And then also I did a 5-day return and a 10-day return after earnings. And so if you look at this, this is the average of all of them. So, excuse me. The next day, the average gap up was 0.61%. On the ones that didn't look very good going into earnings, the average gap was lower by 0.18%. So definitely a difference there. Then the 1-day change was up 1.13% for the strong stocks, only up 0.25% for the weak stocks. The number of stocks that went up, this is the stocks that went up. Trying to think, this was stocks that went up at the opening bell. 43 were up, 24 were down. Over here, oh, that is not doing it. That's not adding them up right. I'd have to go back and double check that one out. Maybe I can get back to you on that one. But when you look at the percentages, the average percentage 5 days and 10 days later, 140, 211. Over here, 0.05 and down 0.91%. And I want you to look, there were 10 companies out of all these 125 companies, there were 10 of them that 2 weeks later were down more than 10%. If you look at the down group, 8 of them, 1, 2, 3, 4, 5, 6, 7, 8 of the negative stocks were down more than 10% 2 weeks later. On the positives, there were only 2. Only 2 stocks went down 10%. Anyway, food for thought, because we're going to be doing this again soon. Might want to mark your calendar. That's going to be January 16th. It will be our sneak preview. That's going to be a free event. January 23rd is when I'm going to do this exercise again. That'll be for members, but you can be a 30-day free trial member and still you have access to the events that we have. So anyway, just wanted to point those out. And let's take a look. On Tuesday, I gave you 3 Dow stocks that I really liked going into 2023. One was Boeing, I really like. That's up 7% already this year. Here are a couple from the NASDAQ 100 that I want to just point out. Align Technologies, I'm starting to see after, it looks like the momentum has started to slow, and now all of a sudden we got this break and we closed at the highest level we've seen in about 3 months. AD line starting to strengthen. I think this is one to watch. Another one is in the semiconductor space, ASML Holding. We bottomed back in October, and this one's actually performing really well. Strong AD line. And then the last one I have for you is a biotech that's just starting to turn. SGen, CGen. You can see the move down. Now we're starting to move back up. I love the AD line breaking out to a new high. Nice finish on Wednesday. Anyhow, that's it for me. I really appreciate you tuning in. Come join us on Saturday, please. MarketVision 2023, we're doing it free, so more of you can attend. It's going to be another great event, so make sure you sign up, and I hope to see you there. Happy trading, everybody.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.